Good morning. This is June 2nd, 2014. This is our weekly morning market update that we're going to begin this week. It's going to be the first of the weekly morning updates that we're going to do every morning now, just to kind of go through some particular products and start talking about them in terms of people day trading and so forth. Okay. Normal procedures before we begin. Normal disclaimer: this is to state this is for education use only. We're not soliciting you to buy or sell any particular instruments. If you decide to take any instruments, you're doing that at your own risk. All the charts you're going to see are basically from TradeStation. Okay, so let's go through and let's begin. Let's start talking about the U.S. markets. Well, actually, before we begin, if you guys haven't seen it on Twitter and everything, we do post bi-weekly or monthly videos. There's 3 videos that we put out on YouTube. One is for the global stock market. This covers every country in the world, all exchanges. So if you listen to yesterday's posting, you can see in Asia, New Zealand is very hot. Next is India. If you go over to Middle East, you could see Saudi Arabia is leading the way over there compared to Dubai, Abu Dhabi, Qatar, Kuwait, and so forth. If you go more towards Europe, you could see that Norway is leading the effort right now, and also Germany is broken out compared to UK, and France has broken out, but not too much. And then we also have a video on futures market where you could see what's happening with soybeans, corn, crude oil, natural gas, so forth. And then lastly, we do have a posting for currencies too, where you could see exactly what's happening with the yen products, the New Zealand products, and so forth, and you can see what's trending and not trending. So these right here will go for all the individual products in great detail. This morning video is pretty much just going to start going through analyzing some of the particular products out there and kind of give you a summed up view of them. So first thing we're going to look at, if you look here, these are my charts. This is daily, weekly, monthly, and then down here we got the swing trading time frames, which are 120, 240. If you look at this here on a weekly perspective, you can see the E-mini here has not, and let's enlarge this, we have not yet at all broken the Cajun Center at all for a very, very long time. You can see that. You can see that we really haven't broken the Cajun Center at all for a very long time. Since this point right here, we had a little bleep below it, but we really came above the cloud on the E-mini on the weekly here in 2012. We came down here, went below it here, but remember this is a moving Cajun, since that really doesn't matter. There's a flat part. We bleeped a little below it there, and then a little here. But you notice overall we really have not completely gone below that green line at all, which is the container of the trend, which is the Cajun Sen in Ichimoku. So until we get below that green line, we are not going to engage in a major pullback at all. So right now we're continuously keep on going up. We're continuously pulling back to the red line, which is the Tinkinson, and so we're continuously, which is healthy. So in order for this healthy trend to keep on continuing, we're continuously pulling back to the red and green and starting to move up. So this is still a very, very healthy trend as far as the weekly picture is concerned. And the only thing that could override that is the monthly. And you could see from the monthly here, when we came out of the cloud back in the little late 2010, you know, in pretty much end of 2010 is when we came out of the cloud. We pulled back to this yellow line here in mid 2012, and since then we pretty much have gone on a tear going up. And you can see on the monthly chart here, we really haven't penetrated the red line at all. So this is still extremely bullish. If you look at the daily time frame here for the E-mini, we've broken out to the top side here. We broke this resistance here, and let me mark it up real fast. So if you look at this here, we've kind of broken this resistance here and continue to keep on going up. Sooner or later, we're going to have to undergo a pullback where it's going to have to come back and retest the red line, the Tinkinson, or this value here. But this market's still going up. And let's go down to the lower time frames and let's look at the swing trading and see if we see any weakness at all. And if you look here on the 120, which is a smaller of the 240, than the 240, you really don't see any weakness here. In fact, if you look at the 120, since it came out of the cloud here on May 21st at 9 a.m., U.S. Eastern Standard Time, we really haven't even broken down on the green line there. So this is still extremely strong on the 120. So the first signs of maybe us reaching a top is going to be where we get below the green line on the weekly, sorry, in the 120-minute time frame here. Let's go look at the hourly and see if we see anything there. And you can see on the hourly here, we've also broken the cloud here on May 21st at 9 o'clock. We've gone above there. We kind of went below the green line here, but we haven't really gotten below the cloud here. So really the first thing I'm going to look for is a sign of a weakness before I even start thinking short on the E-mini S&P 500 futures or anything in general for the markets is going to be the 60-minute time frame where it gets below the cloud and starts setting up below the cloud where the sentiment changes. So that's going to be the first time frame I'm going to be looking for it as far as the day trader. As soon as it gets below the cloud on the 60-minute on the E-mini S&P 500 futures, then I'm going to sit there and take a perspective on saying, okay, now we may be going bearish and start looking for bearish trades. But until that point, I'm really not going to do that at all. Okay, let's go back and, whoops, sorry. So that was the E-mini S&P 500 futures. Now let's look at all the overall markets for all the U.S. and see which one's strong. So this represents the S&P 500 futures. Let's go look at the Dow. You can see the Dow's making new highs here, and look at the daily time frame here. There was a resistance here. This barely broke above that resistance last week. If you look back at the E-mini S&P 500 futures, this has been a while here. So the E-mini is definitely stronger than the Dow right now. And let's go look at the NASDAQ, which is NQ. And you could see that's broken out here too. So you could see that basically the S&P is strong. Actually, if you zoom this out here, this is recently broken out too. So the S&P is strong, and then you kind of got the NASDAQ and the Dow kind of tied up equally on which one's broken out here. But let's go look at the lower time frames. And you could see here, this is kind of consolidating on the 120-minute. Let's go look at the Dow again. And if you look at the Dow, this is kind of a cleaner bullish trend here. So if you look at the order of sequence from strongest to weak as far as the U.S. market's concerned, you're looking at the S&P is extremely strong compared to the Dow and NASDAQ. Then you got the NASDAQ next, and then basically Dow next, and then the NASDAQ after that. So that's basically the way the U.S. markets look. Let's go look at the dollar before we start looking at some currency pairs. And if you look at the dollar index here, you could see from the weekly time frame here and the monthly time frame here that the dollar here on the monthly time frame is still bearish. And you could see here it's been holding the resistance right around here, 85.05, and that's a nice little level that's been holding and maintaining as we move forward right here. So as long as we sit there on a very long-term picture, remember this is the monthly chart, that's way up there. So this monthly chart is still going to be bearish until basically we get above that level. Let's go look at the weekly time frame. The weekly time frame here, if you zoom in here, you could see that basically a little short ugly bearish trend here. We've kind of consolidated, and then we had a chance here in this bottom of this consolidation, which is a micro consolidation pattern, to break down. You can see this little shakeout here. We didn't break down at all, and then in fact what we did was we closed above the Cajunson, which is not good for the bears at all. So this is starting to show signs where this definitely got to the bottom of the consolidation pattern. It doesn't look like it's going to break the bottom of the consolidation pattern, and now it looks like it's going to make a move to halfway, which is going to be this yellow line here, right there is the level there, 82.47, and if it gets that level and breaks it, then it's going to get to the top of the consolidation pattern, which is pretty much right about here. So I definitely would be thinking that the dollar is going to be strong here as long as we maintain staying above the red and green line here. The tricky thing is this is the bottom of the consolidation pattern. We had a nice little movement up here. We could sit there, pull back to this bottom again here at 79.86, and then make a move up. because this does need a little minor pullback. So question is how strong that pullback is going to be. Will it only pull back to about 80.30, or will it pull all the way down to the Tinkinson, which is 79.86? So we're going to wait for a pullback before we even think that the dollar futures are bullish. Once we get the pullback, we'll see at what level the pullback occurred, and then we could see exactly how far this thing has a potential of going. And you can see here from the daily time frame, it came out of the cloud, so it's bullish, but it's not completely come out of the cloud. Got a lot of volatility. So again, we said we need to pull back here, and you can kind of see here some weaknesses on the 120, but it's kind of hesitating here and breaking out. So definitely we're going to wait for a pullback on the dollar and then move forward from there. As far as currencies are concerned, I'm going to quickly go through them from the weekly perspective here. You could see here Australian CAD. This is basically bullish right now. However, it's going for a pullback, so it's a little counter trend bearish movement right now to go up. Australian yen. This is basically bearish right now to the green line on the weekly. It held a resistance right around 96 moving forward. Australian Switzy, this is in counter trend mode. This is bearish. However, it's bullish right now, doing a pullback up to the weekly cloud. Australia, New Zealand, this is basically bearish, but this is also in counter trend mode. Now, I've gone for some of the Australian pairs, just kind of give you an insight what that YouTube video that we talked about, we posted already. It'll go for all the details out there. But what I'm going to do is I'm going to cover some of the currency pairs a lot of people are interested. One is the Euro USD here. If you look at the Euro USD, this basically is bullish, but now it looks like it's trying to do a major pullback on the weekly time frame, which is getting to the cloud. Before it could sit there, get to the cloud, we need an upward pullback momentum movement. So we kind of looking for price to sit there and pull up, go up to about 37.34. Once it gets that level, we're going to wait for it to hold that level and then sit there and target a major pullback for the Euro USD. Trying to bet on it going down right now could be a little deadly with the reward risk being inverted, and that's one of the reasons why we're not looking at that. That's our quick synopsis of our market analysis over here. If you guys have any questions, feel free to contact us. Here are our contact details here, and I will see you guys next week. Thanks.